Thank you for joining us. Welcome to Business Incorporated. I'm Chimezie Obi Iwagu. Today on the show, Nigeria's total trade grows by 2.50% in first quarter of 2019. South Africa's rand continues to tumble on central bank worries, even as the net foreign reserve slipped to $43.18 billion in May. Plus, Ethiopia's 2019-2020 coffee exports to rise to record high. Let's get the show started now with the markets. And here in Africa, the Nigerian all-share index was unchanged at intraday, but the JSE index was up 1.01% despite the squabbles between the Reserve Bank and the ANC over the central bank's mandate. Egypt is closed, and Kenya was positive on Thursday. And the markets in the Middle East remain closed. However, on Monday, when it traded last, all the indices were in the green. The Abu Dhabi index was up 2.82%, while Dubai's index was up 0.79%. In Qatar, the index was up 1.49%, while Saudi's index gained 1.22%. In the UK, today, Friday, June 7, marks the day that Theresa May is expected to officially step down as leader of the UK's Conservative Party. However, she will maintain her position as Britain's Prime Minister until a political heir is found. Well, let's see how that is brewing in London today. Let's bring in Simon to tell us more. Good afternoon, Simon. Thank you for coming through to us.
Hi, Jimmy. How are you doing?
I'm doing good. Well, Theresa May officially steps down today as a Tory leader, but remains UK Prime Minister. What is the mood like at the moment in UK?
Yeah, the mood's generally pretty gloomy today, but that's more to do with the rain outside than anything. After 1,059 days in charge, Prime Minister Theresa May is stepping down, as you said, as the leader of the ruling Conservative Party and as Prime Minister. It's after she announced her resignation 2 weeks ago, you may remember, with that emotional speech outside 10 Downing Street. She does remain the acting Prime Minister until a new leader is elected, of course. All eyes here are on the 11 candidates still in the race to take the top job. We've got Michael Gove, Dominic Raab, Boris Johnson, Esther McVey, and a whole host of others. So I think the mood here is one of intrigue, really, as to which of those will come out on top. And obviously the consequences of that for Brexit. We're very much in limbo here at the moment, not quite knowing which way the government will swing when it comes to Brexit and leaving with or without a deal. It's all very much down to who that new leader is as to which direction the UK ends up taking.
Okay, so how are investors and the markets trading in this, as well as the latest U.S. non-farm payroll data released today?
Yeah, so the non-farm roll data, popularly known as NFP, is scheduled to be released anytime now, and it's expected to show that the US economy added 185,000 new jobs during the month of May, lower than the previous month's upbeat reading of 263,000. Meanwhile, the unemployment rate is expected to hold steady at a 49-year low level of 3.8% during the reported month. So nothing too dramatic there, nothing to impact the markets here too much. Today, the FTSE is up on earlier trading. The all-share up 0.75%. The FTSE 100 up 0.85%, and the FTSE 250 up by nearly 0.5%. Taking a look at the currencies, and sterling is also doing okay today, up very slightly on the dollar by 0.30%. On the euro, it's also up 0.33% on the Japanese yen. Okay,
so when finance ministers of the G20 countries gather in Japan tomorrow for the G20 summit at the end of June, US-China tensions and how to tackle tech giants will be on their minds. And the finance minister of the UK, Philip Hammond, is expected to argue strongly for a global tech tax. How likely is such a tax?
Yeah, so last year in October, the government, Philip Hammond, announced a special digital services tax on US technology firms. Those included Google and Facebook and Amazon, to basically make sure, and I quote, that these global giants with profitable businesses in the UK pay their fair share of tax. The reason for this is that Philip Hammond thinks these international discussions on how to get the big tech firms to pay more tax are painfully slow. They've been going on for years. He said the UK would go it alone and introduce the tax on online firms that make more than £500 million a year globally. He said he expected it to come into force in April 2020, and it would raise about £400 million a year for the Exchequer. However, he has since made it clear that he would prefer to see a comprehensive global agreement to deal with this issue. So my feelings are that while he's announced this tax, he's also half hoping other nations will actually step up, speed up what they're doing and agree on a way forward, so he doesn't actually have to introduce it. All at these meetings in Fukuoka, he's expected to make a renewed push for reform to the international corporate tax framework for digital businesses. He's probably hoping that there's some progress, as critics here in the UK say that his so-called digital service tax will probably raise far less than the 400 million that he's announced. So it'll be interesting to see whether there is any progress at those meetings and whether Philip Hammond does get what he wants, which is some kind of framework or agreement of how to get companies like Google, companies like Facebook to pay more tax.
Sure. We'll wait and see what happens. Thank you, Simon. Well, it's time to say thank God it's Friday. Enjoy the rest of the weekend. And in Europe, stocks started Friday's session on a relatively positive note as investors digested the latest news surrounding trade and the global economy. Of course, all eyes are on the U.S. job data released just about now. Conrad Boson will tell us more from the Frankfurt Stock Exchange. Good afternoon, Conrad.